Privatization of public sector banks 3.1. So here privatization means the transfer of ownership, property, or business from government to the private sector. So, this topic is in news because the finance secretary recently said that the government will privatize most of the public sector banks. Now, the public sector bank means the banks which the government holds a major portion of the shares. For example, SBI. It is a public sector bank and it holds the share of 58.60%. Okay, the government holds a share of 58.60%. Okay, for SBI. So, like that, Bank of Baroda, Bank of India, Bank of Maharashtra are some of the examples. So, in the Union Budget of 2021 to 22, the Finance Minister announced to sell two public sector banks. So, to privatize the bills, privatize this bank, a bill was introduced and in the winter session of Parliament. So the government is going to come up with the banking laws amendment bill to 2021, and this bill amends banking companies, that is acquisition and transfer of undertaking act of 1970 and 1980 and the banking regulation act 1949 to create enabling legislation for privatization of this public sector banks. Is that clear, guys? So now, why is the government showing more interest to privatize the banks? It is because for the better human resource management. As there are many delays in the working process under the public sector, for efficient and effective human resource management, they are going to be privatized. So, for the better human resource management, our Indian government is going to privatize our public sector bank. The other reason is for faster decision making and to develop innovations and achieve 100% efficiency in the process of leading a developed country by encouraging with its innovative ideas, by helping industries to prosper and by offering quality service and guidance. So all these are done by the private sector banks, and the private sector bank also efficiently clears the non-performing assets. Now what are these non-performing assets? Non-performing assets are the NPAs. NPAs means, see, assume a company that has taken a loan of 10 crores but is not paying the amount back in installments. So that company is termed as a non-performing asset. That means it is not paying installments back. Okay. So those are the companies which are not paying back the amount to the banks are considered as the non-performing assets. And moreover, these public sector banks are also losing their market share because the people from urban and semi-urban are slowly shifting from public banks to the private banks. So this is also one of the reason for privatization. So due to all these reasons, that is for better human resource management, for proper decision making, for to develop innovation and achieve expertise, and to encourage efficiency in depth coverage. See, in public sector banks the NPAs are more, whereas in private sector banks they are tackling it strategically to remove all those NPAs. So when considered, see, a comparative study for the period of 2015 to 2019 found that when compared to private sector banks, public sector banks registered higher NPAs. So this is also one of the reason, okay, to reduce the NPAs, privatization is taking place. So all these are the reasons. So because of this, the government has decided to privatize two public sector banks by 2022. But there are even few concerns that are associated with the privatization of the public sector banks. What are those concerns? See, generally, public sector banks mainly focus on public development, right? They strive for the poor to develop and also provide many services to the common people at affordable price. But by privatizing the public sector banks, they mostly see the public sector banks mostly concentrate on profits, whereas the private sector banks mainly focus on profits, whereas public sector banks mainly focus on the poor sector development. So there is a chance that for their profits they might not provide their services to the weaker sections of the society if we privatize, and this can lead to many conflicts and financial crises among the weaker sections. And next is job loss. If they privatize public sector banks, there will be a major job loss. Over 1 lakh employees has lost their jobs from 2017 to 2021. And it also doesn't follow any policies like reservation system, etc. Thus, there is also further chances that the employment among the youth might also shrink. So there are some issues regarding the safety of deposits also. And there is also a chance of bank failure if privatization takes place. In the past, that is from 1935 to 1947, there were 900 bank failures. And from 1947 to 1967, there were 665 bank failures. Okay. So there might also be a chance of bank failures if privatization is taken place at large level. Now, the question is how the bank failures are affected to public. Yes, banks there will be a bank failures, and how these bank failures are affected to the general public. It is because the public are the depositors of all these banks. If there is a bank failure, then the saving money of the public is lost. So, to save such banks in 1969, some banks were nationalized. But leaving behind the public sector banks, privatization is not the only solution to tackle such problem. Yes, that is true. See, if there is no efficiency, we can increase efficiency by creating innovative solutions. Privatization is not the only solution for this, right? So for autonomous decision making, we can also encourage them by providing incentives. Non-performing assets also can be decreased in the public sector banks if we efficiently manage the employees. If proper management is there, even non-performing assets also will decrease, right? Privatization is not the only solution, right? So now let us see about the recent steps that are taken to strengthen the public sector banks. First is technology enabled or smart banking. So the loan management systems and central processing centers, public sector bank loans in 59minutes.com, trade receivable discounting systems, advanced queue management systems, centralized processing hubs, etc., were all introduced to strengthen these public sector banks. And the next is to monitor loans, automated early warning systems were used. And next is for risk management, institutions of technology and data driven scoring and scrutiny systems in the bank that comprehensively factor in third party data and non financial risk factors and provide for higher scrutiny of higher risk cases. That is, even for risk management, there is improved adherence, and there is empowerment of bank boards. All these are the initiatives which are taken for risk management and for resolution and recovery. For this recovery, one time settlement platforms and portals, and EDRT, that is debt recovery tribunals for online recovery case management. All these are some of the initiatives which are taken to encourage the recovery process. And for better governance, non executive chairman introduction and strengthening of board committee system, effective use of non official directors, and peer evaluation and training were also provided. For human resource, ensuring role based e learning and putting in place objective performance management systems were introduced. For recapitalization, infusion of 3.17 lakh crores by the government was done, and mobilization of over 2.49 lakh crores by the banks themselves were taken place. And for market strategy and reach, doubling of dedicated marketing sales force between March 2018 and March 2020, and quadrupling of sourcing of loans through the sales force and marketing tie-ups between Q4 financial year 2017 to 2018 and Q4 financial year 2019 to 20. So all these are the marketing strategies which are taken up. Now, the way forward is, see, the privatization should be limited to only few public sector banks. Privatizing all public sector banks might undermine the tremendous contribution to these banks over the years. Yes, public sector banks have contributed more, especially to the weaker sections of the society. And privatizing those public sector banks will show some disrespectfulness towards them. So, their contribution should not be wasted. Next is, the government should own at least 26%. Even Narsimhan Committee also recommended dilution of government with 33% of shares is needed. And next is, to identify the suitable investor. We have to identify suitable investor so that the banks can attain better operational efficiency. And next is, by developing new asset quality review, saving the banks from bad loans can be done. All these are some of the guidelines to limit this public sector banks from total privatization.